Next from Springfield, we talk with Dan Long, the Executive Director of the Illinois Commission on Government Forecasting and Accountability, about the effect on state revenue with the state income tax rate now dropping. Mr. Long also comments on the financial hole expected for the fiscal year 2016 budget and whether the state can pay off some of its debt in the near future, thus expecting more revenue. This runs about 12 minutes.
Dan Long, thanks for joining us again on the Illinois Channel. And as Bruce Rauner is about to be sworn in as governor, we thought we might want to take a review of just where the state is as he enters his governorship. And first of all, we all are aware, I think, that the income tax just went down, reverted back to its previous levels, and which is going to cost the state to lose a certain amount of revenue that many in the legislature would say that we could ill afford. Where are we right now, just in terms, let's say, of the revenue coming in, and what impact would the income tax going off have, first of all, on the current year's budget, which ends June 30?
Well, Terry, it's nice to be back with you again, and you're correct. The tax rate for individuals did drop January 1st from the 5% down to 3.75, and corporate from 7 to right around 5.25. And that it's going to have it had a dramatic impact in putting together the fiscal year 2015 budget, which we're now about halfway through. And the drop off in revenues as a result of that was about $1.2 billion that from the fiscal 14 budget. Some of that was offset.
Can I the 1.2 billion, is that for the whole fiscal year, or is that just for the last 6 months of the fiscal year?
That's for the entire fiscal year, and it's offset a bit by what the General Assembly did to offset. It really would have been closer to $2 billion, but they made a provision in order to balance the 15 budget where you could borrow, a borrowing of $650 million from other state funds, which would be paid back over months. To date, that hasn't taken effect. None of that borrowing is in place, and of course, if it doesn't, well then you've got an additional $650 million shortfall in this year's budget, which would have to be dealt with.
And then we have next year, Governor Rauner would come in and will be giving his budget address in February, I believe. Do you remember the date on that?
It's right around the middle of February, 15th, I think, somewhere in that range.
And so when he puts together the budget, that would be for the fiscal year that starts in July and would run through the end of June of 2016. As we look at that fiscal year 2016 budget that would begin in July, the first budget under Governor Rauner, what kind of financial hole is he going to be looking at as we look at that fiscal year currently?
Well, looking at 2016, our preliminary estimate is we're going to be, the revenues are going to go down by another about $3.2 billion. 3.2 to 3.4 billion, so significant fall off between 15 and 16, which 16 will be the first full year of the reduced income taxes. This year was only half a year, 6 months, but 16 will be the full 12 months, so you'd expect that there would be even a bigger fall off. Now, not all of that is the result of the income tax fall off, but the majority of it is, at least well over $2 billion is the result of that. The other is, you did the $650 million for 15 to balance the budget. That's one-time revenue. If that's not repeated in 16, well, you've got to recognize that as a decrease in the amount of revenue available. So, significant amount of revenue decrease. Combined, there will be some spending pressures as well. So, very difficult job come 16.
Yeah, you mentioned $650 million, which the legislature authorized to borrow from other funds that have some money sitting in them. Governor Rauner may or may not elect to borrow that money. Looking at some numbers before we started the interview, the current fiscal year's deficit with the revenue from borrowing from the other funds, the current deficit would be about $180 million. So that's not too bad. But if Governor Rauner were deciding not to use any of that borrowed money, then he'd be looking at more like $830 million deficit or so.
Right. I mean, the revenue shortfall is 1.4 billion, but that was accounted for in putting together the budget. Now, some might say that they didn't sufficiently fund the agencies, and there may be some supplemental appropriations needed to get through the fiscal year, but that's a whole different issue on the spending side. But yes, if that 650 million if it's determined we're not going to borrow that funds by the new administration, well, then you'll have to make somehow come up with $650 million reductions in spending.
For this year, between now and
For
June.
this year, that's correct. In addition to in each year, as you go through the fiscal year, there's need sometimes for supplemental appropriations. So that 650 million would be on top of any kind of spending pressures you might have, which some have indicated those could be nearly 700 million or so.
And just to remind the viewers, when we talk about the fiscal years, again, they start in July 1st for Illinois and end June 30th, and we always refer to the fiscal year as the last month of the year in which it ends. So we're currently in fiscal year 2015. Dan, how long have you been running the COGFA?
I've been here nearly 15 years now.
Relative to the history that you've seen and knowing the numbers, how would you say, how bad off is it in a historical context from the history of the time, the last 15 years you've been?
Oh, this is probably one of the most difficult times to deal with. I mean, when you have a revenue shortfall over 2 years of, somewhere in the range of $4 to $5 billion, that's a very significant portion of the general fund's budget, and it's gonna require a lot of constraint in terms of on the spending side. And then maybe other means of generating some kind of revenue.
And again, one of the ways the state is getting by is basically they're just not paying bills. I mean, they have a shortfall, but they're not proclaiming they're not paying bills. They just stuff them in a drawer until money's there, and then they take, I guess, out the older bills first. But they're basically rolling over bills and running up the backlog of unpaid bills. Is that more or less what we're doing?
Well, that's true, and I don't think they're trying to hide it. I mean, if you're a vendor out there, particularly in the group insurance program, where we've got at least $1.5 billion shortfall, some vendors are waiting for a year to get paid. Now, it has come down somewhat. I think in fiscal 10, it approached $9 billion at one time. Now it's making this year in the $6 billion range, but still, we've been carrying over a backlog of bills, even with the income tax increase. We're still carrying over the backlog, haven't gotten that completely paid off. They've done a good job of paying that down a little bit each year as revenues came in better than what was anticipated, and they used that to pay down some of the backlog. But still, we're facing a significant backlog of bills, which will probably continue to grow this year, given the fall off in revenues.
Any homeowner would know if they paid off their mortgage or paid off some car loan or something, they would all of a sudden have some more revenue available in their budget. Do we have anything on the pot, looking for some positives? Are there any levels of debt or notes that we're going to pay off that might bring in free up some monies that we're currently spending?
Not in the foreseeable future. We did borrow about $7 billion in what was called pension obligation notes, but the debt service on that's about $1 billion a year through 2019. There might be a little fall off in 16 of a couple $100 million, so instead of $8 billion, it's like $860 million. But no, I don't think until 2019, when those notes are paid off, where we will have that $1 billion that's going towards that debt service. The other is kind of on the other side of the ledger. It's the capital program, and those are to fund bonds for capital projects, roads and bridges and buildings, and there's specific revenue sources to pay off those bonds, really separate and apart from the general fund budget.
But those revenue, I think that was under Governor Blagojevich that he borrowed on the pension obligation bonds?
Yes, it started in fiscal 2010. We issued, borrowed about $3.7 billion, and then in fiscal 2011, we borrowed about a similar amount. So the total was about $7.1 billion over those 2 years, and that created a significant debt service, like I said, of about $1 billion a year through 2019, fiscal 2019.
I remember just a few years ago, speaking of the pensions, and obviously everyone I think is aware now that Illinois faces. Last June, I think the unfunded liabilities were at about $110 billion for the 5 different funds. What are the estimates? What do you think the total liabilities are going to be?
Well, that's true, and I don't think until 2019, when those notes are paid off,
I don't remember which fiscal year it was, but the pension payments jumped by $1 billion in just 1 year, eating up revenues. How are the pension payments looking as far as over the next several years? Are we going to see similar jumps?
This year, for fiscal 15, it was one of the lowest we've seen in a number of years. It was probably less than 100 million. Next fiscal year, fiscal 16, that's going to be a spending pressure because the pension payment's going to jump out of the general funds by about $600 million. So it'll be, somewhere in total $7 billion, but in general funds probably $6.5 to $6.5 billion. So a significant jump next year.
And the other thing, as far as where the state is in funding, Illinois, I think the number one line item in the budget is what we spend on education. Is that right?
Education, in terms of general fund, probably takes up, over 40% of the total budget. Yes.
And yet, for those who say we should cut education, we use a term, the foundation level, which is supposed to be we're going to pay at least a minimum amount per student, which is $6,019 per student, but we're not really, the point is we're not even paying that foundation level, so it's somewhat of a misnomer. I think we're only paying currently about 89% of that level. Right?
That is correct, and I think that was true in fiscal 14 and 15. So, if you went into fiscal 16 and you wanted to increase that number, foundation level to 100%, which is what school districts are normally basing their budgets on, well, that's going to take another $550 million to get back to 100% of the foundation level.
Yeah, just what we're allegedly promising them that they're not getting.
Well, that's right. I mean, when you only have so much money coming in, I think the decision is made, we don't have enough money to make that full payment, so we're just going to prorate it. And there's about 80, based on the funds that are available, there's only enough to pay 89% of the foundation level at this point in time.
All right, well, Dan Long, I know we could talk much longer. We appreciate you giving us the snapshot on time, and we'll have to see what the governor and legislature work out.
Well, again, thanks to you, Terry, and to the Illinois Network.